Yo, what's up, guys? I hope y'all are having a good day so far. Today, I did take a short on NASDAQ. I did have FOMO. This is probably one of the first times that I ever had severe FOMO. Right now, I'm not in drawdown on my 50K account, but I am. I've lost 2 trades last week, and then I've had 2 break-even days this week. So my mental has been kind of everywhere. Um, and that's the hard part about trading is it's a lot of it is just mental, right? It's all psychological, right? You have to a simple edge, and then you have to master your psychology, right? So pretty much this entire trading journey that I've had for 8 months, I've not been terrible with my psychology. I've never revenge traded or anything like that. Even today, I did not revenge trade. I would beat myself up forever if I ever did that. But yeah, today I had really bad FOMO, and I can go over the trade that I took as well as the A plus short that I saw right after and my correct bias as well, right? So this just there's a lot to learn from this, and I think that this will be a big turning point for me in my trading. So yeah, let's just get straight into it, right? So going into the day, we have PPI. I think it was either PMI or PPI. I think it was PPI. We had core PPI, and at 8:30, so we had this huge candle. We had this data low formed, right? So this is the first point of interest. And let me go on the hourly, and I'll show you how I frame my hourly bias, right? So let me get rid of this data low quick. So let's back it up to about 9 o'clock, right? So this is over here. Oh, whoops. Okay, so going to the day, we're at all-time highs, right? We just took all-time highs from the news release, right? PPI news release. And as you see, overnight we inversed this BISI as well as this BISI right here. I don't really care about this one that much because we've already broke again through it, but it doesn't really matter because this is the other for F in the leg. So now we're looking at this one, and I see that okay, we took out all-time highs, and then we wicked all the way back down. So this is a huge bearish indicator, right? We have a huge expansion like this, and then a huge push back down to close below this IFVG to not disrespect it, right? And then we close below it, and then we have this candle right here, which is also at the time respecting it. And so this was giving me a very bearish bias towards these equal lows down here, which is aligned with that data low. Yeah, so let me pull up this chart as well. So also, my hot time frame bias was bearish because of this. This was Friday, so this was NFP, right? This is NFP, 8 o'clock. This is their huge news release, right? And I did it standard deviations from the wicks, the top and the bottom wick, and because that is a lot of manipulation, so that's usually where you want to do your standard deviations if you do have the opportunity to do that. And then I have my standard deviations right here, -2 to -2.5, which is the reversal or retracement zone. And as you see, bodies are respecting it perfectly, right? And so we're up in this now. So now I'm expecting a retracement or a reversal. So we're so high up this week already that I was like, okay, we're probably going to reverse today. It's Thursday. Everything's aligning. We're probably going to reverse, and we're probably going to dump. And this is my target right here, this void. This void and this sell side. So we'll see what happens today if we hit that. Most likely, I believe that we're going to hit this low tomorrow. Just because we were so high up on this week so far, I don't really see us go any higher. But it's all time highs. You never know. So that's my bearish, or that's my high time frame analysis right there that gave me the idea to short, right? Now let's go back into this, right? We have this data low from PPI. My fault. So we had data low, bottom right, and then it was aligned with these lows as well. So there's relative equal lows aligned with the data low. And then we had, I consider this the original consolidation of this market maker sell model. Oh my god, man, I cannot spell right now. My fault. So as you can see right here, we have this obvious market maker sell model. We took all-time highs up here, and we had a very swift reaction down, and we had this reaccumulation right here, and we're probably gonna continue dumping, and that's exactly what happened. So this is what gave me my bias as well. So keep in mind that we also have a market mirror cell model going on, data lows below, and yeah, that's about it. So going on the 3-minute right here, I saw this really tiny inversion for value gap, right? And all of a sudden, we have this huge dump right here. And it wasn't even a strong close, you know, but I just had that impulse reaction. I've never done that before. And today I finally got the taste of what it's actually like, and I'm gonna learn from it. But so very, very trash trade, as you can tell, right? This is a very terrible inversion to take. Very terrible inversion to take. This is just not worth it at all. And what I usually do is I take obvious inversions. So let's just say this inverse right here. Let's say if the price kept on pushing up above and it closed right here, right? That's an obvious inversion, because that inversion for value gap is super obvious. There's no retail traders are going to use this. Like, they're not going to see this at all. So there's no actual like liquidity lying here at all for me to even like enter this trade and continue it lower. All right. So my bias is correct, like I said, but this is just a terrible trade, and I just had that huge impulse right when I started seeing prices dump. I was like, okay, dude, I'm gonna miss this trade if I don't get it right now, and I instantly pulled up my micro Nasdaq MNQ chart and executed five contracts, 5 micros, and right when I sold, I instantly regretted it, because I knew, I was like, this is probably not gonna play out. That was a terrible execution. And yeah, you just can't. You gotta learn to not care about your feelings, you know. And that's the hard thing about being a trader, is you can't care about what you feel, right? You can't give in to impulses. You can't give in to temptation to, you know, execute. Even though you think it might go lower right then and there, it doesn't matter, right? Because the markets are always going to be here, so it really does not matter. So if I did miss this trade and it just continued to dump, it doesn't matter, because guess what? The markets are going to be open tomorrow, right? It's going to be open next week. It's going to be open for next year, etc. Right? So that does not matter at all, and that's why I need to start realizing. And I'm starting to realize is that I do not have to trade every day. You know, the best traders are the traders that take 1 to 2 trades a week. They capitalize on their gains. They take very A+ setups. They take very good setups, and they don't take very trash setups like this, because they don't want to risk losing this. You know, that's just not worth it. They want to take good, solid trades and then enjoy the rest of their day, right? That's the whole point of trading. And I'm kind of missing the point. Yeah. So like, I just need to learn from that, and if any of y'all are struggling with that, hopefully something in there helped y'all. So yeah, right when I lost this trade, instant regret, right? And so I hopped in my paper account, did not revenge trade this at all, and I took this short right here. So as you see, this SIBI was holding. We retraded or rebalanced this completely to the tick. And then we continued lower, and then as you see right here, there was no SMT right here, but we had a intermediate term high taken within this fair value gap. The SIBI was holding, bodies were respecting it, and then we had this really obvious inversion that I would have taken if I did not have FOMO on this trade, right? I would have taken this 100%. I have no doubt about it. This is my setup. This is a very obvious setup for me. For my stop loss right here at this high. When I was in the paper trade, it was literally like a tick. It was literally a tick from taking me out. Yeah, literally a tick from taking me out. Never did though. If it gets like really close to my stop loss, I usually just let it like just take me out. There's no point, because sometimes it really can reverse a tick away. And there's no point in saving $10, you know. And as you see right here, it completely played out that way. Like I said, 3.6 R. Tick away and then just dumped, right? We had this huge range and then we just absolutely dumped. We had data low below, as well as this original consolidation. That is what I targeted. So yeah, it just dumped right here. And let me pull up the execution real quick. Actually, I think I got on. Yeah. So yeah, this is the paper trade that I took. Shorted it right here on this candle, really close to stop loss, held it, and then it just dumped all the way to data lows. Took a partial at the data lows, and then hit my main target, my full TP, the original consolidation of the market maker sell model, and then we were out fully. So yeah, slowly learning. Getting better by the day though, so like at least I'm learning something from these losses. A lot of people take losses and do not learn from them, and that is a huge mistake that a lot of traders take. Right, you need to journal your trades especially when you start. You need to journal your trades. You need to figure out what's working with you and what's not. Right, you need to figure out what mistakes you are making, because if not, you're never going to improve upon them, because you don't even know about them. Right. Today, right when I executed, I knew exactly what I did wrong, and that's what you need to do in trading. You need to figure out what you did wrong in each and every trade, even if it was a win. Like you got to figure out what you could have done better that trade, right? And it's just constant improvement. So yeah, I will definitely learn from this experience today, and it sucks, but it happens. So like now, I think I got it recorded in my Notion because I already did my journaling of the trade. So now I lost $194 today. Yeah, so now it's at 51,903. So this goes to show that emotion can really just completely switch the way you think about trading. Just last week, before last week, it was the week before last week. I was, as you can see right here, I was literally $355 away from passing my account. Right, $355. That's it. And then I took a loss right here, break even right here. Took a loss on Monday. This is when I really started like, okay, well, dude, like what am I doing? All right. Lost this trade, and then now I'm going to de-risk. So tomorrow I'm gonna risk 125 until I can build it back up to probably. I'll probably de-risk. I'll probably trade or risk $125 a trade until I can probably get it back up to like 52,200. Right. So it just goes to show that like it doesn't matter how close you are. Even if you do have a funded account and you're really close to a payout, it can happen like that. If you get too hyped, if you get too emotional about it, I wasn't even that emotional. It's just like I was excited that I'm really close. This is it, and it gets to your head, and you cannot let that happen. You cannot let that happen at all. So yeah, if y'all enjoyed today's video, found it somewhat helpful, that is what I'm trying to do on this YouTube channel, is trying to help people out, especially people who are trying to start. I do have a Discord. If y'all want to join, I'll put it in the description. Me and my friend are both working on our evals. He's been trading for about 6 months. No, he's been training for about a year, a little bit over a year. I've been training for about 8 months. This is my first eval that I've ever taken, and we're just trying to get a lot of like-minded people in there. It's not even just about trading, but just about just bettering ourselves each and every day. So yeah, if y'all want to join that, I'll put it in the description. Be happy to see y'all there. All right, peace out.